What's up everybody? Welcome to the Stocks channel. My name is Corey and today we had an overall flat day in the market, but we are starting to make some bullish developments. First up, let's take a look at the S&P500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today we saw SPY going down 0.22% and again we got rejected at that resistance level at $420. Today was the second day in a row that we closed back above that 20 simple moving average and we are starting to see these moving averages starting to cross back to the bull side. Once that 13 EMA gets back above the 20 simple moving average, we will have a full bull trend on SPY. So once we're in a full bull trend, if we do get one, that will give benefit of the doubt to the bulls to push the price action higher because they'll have the benefit of the trend on their side. Now keep in mind the critical support level for SPY is still going to be right at that 20 simple moving average, which is still at $416. As long as SPY is trading over 416 and building up a bullish trend, it will increase the probability chance that we're going to blast through 420 and start getting to these next price targets. We do have price targets above at 420, 423, and 429, but remember not to look ahead because we still need to close over 420. So your critical resistance level to watch is 420 and your critical support is 416. If SPY starts breaking back down below 416 at this point, that will be bearish price action and it means this was all just a fake out and it was all just a bull trap and we're going much lower. Remember, back below 412, it's looking a lot more bearish and we're more than likely going to close the gap down here at 400. But right now, the bulls are doing everything they need to do to continue to build a bullish trend and try to get the SPY back to all-time highs. For now, we still have a lower high situation and you want to set your risk level at a close below 416 if you're going long on SPY. So remember, sometimes in the market, it's better to just do nothing. And this is one of those times if you're not sure what to do, just be patient and wait it out. Even if we get to all-time highs, we're more than likely going to be due for a correction after we get there. So be patient and don't bother chasing if you miss this move. And if you do enter, make sure you're setting your risk on a close below 416. On the NASDAQ 100 triple Qs, we were pretty flat today, only going up 0.14%. The triple Qs did close back above that critical resistance level at 332.5. We did test the next resistance at 334.6, and that's going to be that critical line in the sand that the bulls need to break above. That level was resistance today, but if we can get a daily price action close above 334.6, that's going to significantly increase the odds that the triple Qs are going back into a bull market. You can see the triple Qs close back above that 20 simple moving average now for 2 days in a row, and that 13 EMA will start crossing back above the 20 simple moving average, and the triple Qs will also be in a full bull trend very soon. So remember, when you have a full bull trend, the price is going to get pushed higher by the trend, and that will increase the probability the triple Qs are going to all-time highs. So watch the critical resistance break of 334.6, and above that, we're more than likely going to see our price targets met at 339 and then possibly retest all-time highs at 343. So we have critical downside support right around 329, which is that 20 simple moving average, and the 50 EMA is just below around 328. Remember, if the triple Qs start breaking below that 20 simple moving average and the 50 EMA, that is going to be a bearish indication and it could mean that we're going much lower. We still have a gap to fill below at 323 and 315. So if we start breaking back down below the 50 EMA, that will be the early warning sign that we could be going back into a bearish trend. Right now, though, it looks like the bulls are starting to take over slowly but surely. And if we continue to see follow through on the price action, we will start seeing another bull market in the triple Qs. On the Dow Jones ETF, we were down about 0.25% today, and we closed back above the 5 EMA yet again. So that's 3 price action closes back above all of the moving averages, and the Dow Jones is now in a full bull trend. So just like I said before, the Dow Jones could have been leading the way, and it does look like the Dow is going to start going back into a bull trend from here. The critical support level on the Dow is still 341.6, and if we break back down below that level, we're more than likely going to retest support at the 50 EMA at 336. If we break below the 50 EMA, look for the gap close below at 331.6. But as long as we're trading above all the moving averages, we're more than likely going to try to fill this gap above right around 347.6. We will have strong resistance at 348 and the previous all-time high at 350. On the Russell 2000, we continue to see weakness and we see the Russell 2000 going down about 1% today. I said this just last night that the Russell 2000 was looking the weakest, and today we see the price action breaking back down below all support levels. The price action is below all the moving averages, and it does look like the Russell 2000 is trying to go into a full bear trend. So why are the other 3 indices looking bullish while we see the Russell 2000 possibly going into a bear market? is to be determined, but just remember, like I said, this is a very tricky market, and if you're not sure what's going on, you're better off just waiting on the sidelines and waiting a few weeks to see what happens. Right now, the Russell 2000 is flashing warning signs, and it's saying that it wants to go much lower, especially with today's price action. We tried to break out back above that 20 simple moving average, and we see the price action getting flush, closing near the low of the day. So right now, the Russell 2000 looks like it wants to come back down and retest this $215 support level. And if that level fails, we're more than likely coming back down to retest 209. So the Russell 2000 is looking bearish in the short term. And if that 20 simple moving average crosses below the 50 EMA, it could mean that the Russell 2000 is going into a bear market. So look for critical resistance above at 221. And we need to get back above that 221 target to start fixing this bearish looking chart. On the Arkk ETF, we went up 0.6% today, and Arkk closed right at that resistance level right around 109. That's the 20 simple moving average as well as a resistance level, and we can see that Arkk is still in a bear market. The 5 EMA does look like it's trying to curl back up and cross back above the 13 EMA, but as long as the price action is trading below the 20 simple moving average and the 50 EMA, that's a bearish price action look. And remember, in a bear market, we're looking for short sellers to come in at resistance. So Arkk will be going through a major test tomorrow to see if it can hold above this 109 level. If Arkk can continue to climb higher, we're looking for the next resistance level above at 116. So right now, the downside support levels to watch will be 107.5, 106, and if we break back down below 106, look for a possible double bottom attempt off of 97. On the VIX, which is our fear indicator, we were pretty flat today, going up 1.3%, and the VIX did close above that support level at 18.2. The VIX closed at 18.7, which means volatility is still there and alive, and it means we could see fear coming back into this market. Remember, we need to see the VIX getting below 18.2 to possibly see new all-time highs and to get more bullish on this market. If we see the VIX back above 20, that means we're more than likely not going to see all-time highs, and we will see more volatility and more selling. So draw the line in the sand that we're bullish below VIX 18.2, and we're more conservative and bearish at VIX above 20. Those two levels will help you navigate this market. So if you're watching the VIX, you want to watch those two levels very closely, and they will help you understand if we're going bullish or bearish from here. On gold, we had another bullish day today, going up about 1%, and we are looking like we're starting to head higher towards that next price target at 1923. Look for downside support at 1876, and if we break back down below 1876, we could be coming back down to 1833. On silver, we also had a bullish day today, and we did get a price action breakout above that resistance trend line. Remember that silver is in a full bull trend and it's starting to break out of a resistance level, which means it could start running from here. Look for silver's next price target to be $29 with downside support at 28 and 27.6. On Bitcoin, we're currently down about 3%, and we still see Bitcoin struggling to break above that resistance level at $39,000. Remember, if Bitcoin can't break above $39,000, it could be coming back down to the support level at $30,000. If $30,000 fails to hold up, Bitcoin could be coming down to $27,000. Remember, the critical upside resistance levels are $39,000, $43,000, and $47,000. And if Bitcoin can get back above $47,000, then we can start talking about a bull market yet again. But right now, understand that Bitcoin is in a bear market and all of these moving averages are stacked to the bear side. So the trend is still lower and the price action has to prove itself by breaking above these critical resistance levels. So remember, I said this before and I'll say it again. Don't expect to see Bitcoin just screaming higher back to all-time highs in the very near future. It's going to take a lot of damage repair on this chart to get back to a bull trend. So be patient and make sure that you're paying attention to these critical levels. This is a very volatile market and you don't want to make any assumptions, so follow the price action very closely. Right now, the price action is telling us that 39,000 is a strong resistance level, and if we continue to fail to break above that level, we could see a retest of $30,000. On Amazon stock, we went up about 0.43% today and closed back above the 50 EMA. We have critical support right there at 32.55 and 32.09. And we do see a little bit of a buy the dip candle on Amazon, which is a bullish indication. We still are finding resistance at the 20 simple moving average at 32.80. And remember, our critical resistance breakout level is now sitting right around 33.47. If Amazon can break out, we're looking for much higher prices and Amazon could start to run. But don't get ahead of yourself. We still need to get back above that 20 simple moving average and start building back up a bull trend. On Tesla stock, we were down about 0.29% today, and Tesla did close back above the 5 EMA yet again. Tesla is still holding up above that support level at 594, but it will have a critical resistance test very soon, right around 625. Tesla is still in a bear market with all the moving averages stacked to the bear side, and this could just still be a bounce off support before it starts heading back lower to retest 557. So don't get overly bullish on Tesla because it's still in a bear market, and if it starts breaking down below support at 594, that will be an early indication to get out before it retests 557. Below 557, we're fully bearish on Tesla and we're looking to retest the 400. On Apple stock, we went down 0.16% today, and Apple did get rejected at that critical resistance level that I gave you last night at 128. Remember, Apple is a market moving stock, so if it cannot get above 128, that will be a bearish indication for the entire stock market. If Apple is below 128, we could come back down to retest support at 126, and if that level fails, we could be coming all the way back down to 119. So watch that critical resistance level at 128 and understand that Apple is going into a bear market. You can see the 20 simple moving averages crossing below the 50 EMA, and all of the moving averages are now going to be stacked to the bear side. So look for downward pressure on Apple's price. If it cannot get back above 128, it will be heading much lower in the near future. On the financial sector, we did see selling today and we went down over 1%. We did find support right on top of the 13 EMA, and we're still holding on to the bullish trend. But be careful because the financial sector does look like it's starting to show some sort of consolidation or topping pattern here, and it could break to either direction. So this is definitely a warning sign, and it does look like the financial sector could finally be showing some weakness. On the financial sector, we dropped 0.13% today and closed right on top of the moving averages. We can still see we have somewhat of a bull trend, but it does look like if the price action breaks below the moving averages, we could be coming back down to retest the 50 EMA. On the healthcare sector, we dropped 0.3% and closed right on top of the 5 EMA. The healthcare sector is still holding on to the bullish trend. The energy sector dropped over 2% today, and it did close back below that 20 simple moving average. The energy sector is very close to losing the bull trend if the price action cannot get back above that 20 simple moving average. If energy breaks down below about 51.5, it could be coming back down to retest support at the 50 EMA. So going back to the S&P 500, you can definitely see signs of a little bit of weakness in this market. We still have bullish trends, but we're starting to see some of the sectors showing weakness and the price action and the trends starting to die off. Remember that bull markets take a lot of time to reverse, and it will be more of a rollover effect before we see the dying. Don't expect to see a massive sell-off before we start seeing more weakness across the board. So pay attention to the warning signs and make sure you're watching the sectors closely and paying attention to those VIX levels that I gave you. We're at critical resistance and we're right above critical support, so the price action at these levels is absolutely going to be the key. We're very close to possibly getting back bullish trending, so don't get bearish in a bull market just because we're starting to see some weakness. That weakness can disappear overnight and we could see strength returning to this market in a flash. Remember, on the Stocks Channel Discord, I'm giving you intraday updates and analysis to help you navigate this market and stay on the right side of the trade. I'll also be bringing new trade ideas to you weekly to help you absolutely crush this market. If you're interested in joining the Stocks Channel Discord, you can find out how to join by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.